We're live. Yes, we are. Yes, we are for 2 o'clock live. We are here, ready, up and running. Ready for 2 o'clock live. 2 o'clock. It's 2 o'clock live. I got to sing my own song. Have to remember that I have my own intro song where I introduce myself. I got to have the music. You got to have intro music, right? All righty. It is Monday. The market has already been marketing. It's been already doing its thing. Yes. Hey, Shanae, how you doing? It's already doing its thing already. It's had a good little day of doing its thing. I was going to share my screen here in a minute, but if you've been watching the market today, you see that it kind of SPX kind of ran up into a spot, and then it kind of has held on, fell down a bit, and fell down a bit more. It was kind of holding steady for a minute, and then it decided, well, we'll come on down. We're going to decided to ease on down the road. Decided to ease on down the road just a little bit, still kind of staying inside of a consolidation area. I'm going to share my screen real quick so that way everybody can see. Do you see what I see? You can see what I see, which would be, nope, wrong screen. There we go. This is what we have going right now. The market ran up real quick this morning. We opened right here at 45.84. It went up as high as 45.93. Hit some resistance up here right in this area. Let you know that there's some resistance in here. I believe yesterday when we talked, notice this is the line I put on. I believe it was yesterday when we did our live for what the week was going to hold. We showed 45.90. You always have a plus minus there when you're looking at resistance zones. Zones are never one line. They're never one set price. It's a plus minus 5, sometimes a little bit more depending on how volatile SPX is being. Went up there, hit that, and then came back down. It tried again, 45.90 you see here. Ran right up to that, couldn't go up higher, and it's come down some. Now we've gone as low today as 45.75, right? We opened at 45.84, went up to 45.95, like I said, and we've been as low as 45.75. You want to be careful when you're fooling up with the S&P 500. Yes, you got some support here. You've got resistance. You see, it came right down to this support area, 45.79. We probably could drop this just a bit. 45.79, it's got some support, which we showed that on our chart yesterday. We showed it last night that's where it is. So it's kind of inside of this zone at this point, right? Okay, so I'm going to stop sharing. There we go. Ooh, I pushed the button and it made it work. Hey, everybody. If you're hanging out with me, give me a hearty hello. A hearty hello. Yeah. Y'all see our new shirts? Stay green and get this money shirts. Yes. That's what we do in this community. We stay green and we get this money. That's what we do here. Stay green and get this money. Today, I'm going to talk about the wheel strategy. I'm going to talk about the wheel strategy. I'm actually going to talk about the cash secure puts side of the wheel strategy. I want you to know that we can do the cash secure puts, and then if or when we're assigned shares, we can do covered calls. But we're starting with the put side because that's where we start, right? I see a few people have commented in the chat. Hey, Gab girl, and thank you, Ron. Hey, and Miss Adrian. Hey there, how y'all doing? How y'all doing? We're going to stay green and get this money. That's what we're here to do. If y'all got questions, please be sure to add them to the chat while you're hanging out with us. If you haven't already, go ahead and subscribe to the channel. Subscribe to the channel. Now, this is the last week. I'm going to do 2 o'clock live. I've been enjoying it a little bit, but my schedule is not going to allow for 2 o'clock live for the next couple of weeks. So I'll still be posting video content every single day because that's what we do here. We're trying to bring the world up in the seller community, right? So I'll still be posting daily videos, but this is my last week for 2 o'clock lives. I'm gonna, got to take a short break. We'll pause for station interruption, or I think that's what they used to say on the commercial. Oh, station identification. There we go. Not station interruption. Station identification. We'll have a little bit of time and then we'll definitely be back. You won't have to worry about us, child, because we gonna be here. Hey, Rosalind. Hey, Rosalind. We gonna be here. All righty. Let's talk about selling puts. Let's talk about selling puts. And why do we want to sell puts? Why, oh, why do we want to sell puts? That's not the one I wanted. I wanted a different one. So let's go get the one I do want. There we go. This is the one I do want. Whoop, fill me in. Come on. Why sell puts? Why selling puts is great for growing a small account. Well, it's a few things. Now, I also should have put here that it's great for beginners. If you're on Instagram and you're following me, I'm sharing my screen, but you got to come over to YouTube. Go over to YouTube at Educator to Trader, and then you'll be able to see the screen. YouTube, I'm putting the link in the chat so that way you can, or in the comments, that way you can see the screen too. I don't want anybody to miss the stuff on the screen. Educator to Trader. I think that's typed properly. That looks like it's right. Okay. Why selling puts is great for growing a small account? Well, it's great because it's a very easy strategy, of course, and it's a no-lose strategy. And if you've been on here with me any times before now, you've probably heard me say that. I call it a no-lose strategy because of the fact that either if you sell puts, you get a premium, so you collect money when you sell puts. And if the trade goes well, then you keep the premiums and then the broker releases your buying power. If the trade doesn't go, the price doesn't stay above your strike, then you end up with 100 shares. So you still have an asset. This is why I say it's a no-lose strategy. Either you get money, which you get money either way at the beginning of the trade. If at the end of the trade, things have gone or not gone your way, then you're going to get an asset, which is going to be 100 shares of that stock. And you can use that stock to then sell covered calls, which is the other part of the wheel. That's the other part of the wheel strategy. So this is a no-lose strategy. It's easy to understand. I'm going to show you. We're going to go through one example here today. I'm not going in too deep, but I will give you an example. And there's no special indicators that you need. Nothing special. You don't need to use any indicators. They're perfect for creating passive income, and you don't need to watch them. You turn on these trades. You can check on one if you want to, but you don't have to, and then they can close on their own. Where's a point yesterday, I think Valentine made a point when he commented to one of my posts, and he said, if you're doing this in one of your government accounts, you may want to ensure that you don't put the shares in your account, because I guess something to do with the dividends and getting the shares and yada yada, and it's just involved. So some people trade puts or sell puts just for the income. And if you're doing it just for income, then you want to, before expiration, you want to go ahead and close these trades off and not wait till expiration to see if you get, put the shares, right? So if you only want to do it solely for income and you don't want to acquire any shares, then you have to make sure that you close these trades before expiration, so that, and expiration is the last day at 4:00 that afternoon. So it's not like you need to be early. You can close it the same day of expiration. Just close it during the day, right? Don't wait till after 4:00, because after 4:00, the broker's going to do whatever the trade has prescribed for them to do, right? So if you want to just do it for income, then you want to close them yourself. All righty. Otherwise, let it just run its course. If you end up with the shares, then great. You just sell covered calls against them. This is why you do want to pick stocks that are going to be helpful and be useful to you when you're doing this. All right. Now I'm going to share my screen as it pertains to the stock. We're going to look at one example. We're looking at one example here. I want us to look at EOSE. EOSE. Now, every week I put a list out. I get the selling put suggestions. I get them from Barchart, barchart.com. They're a free screener. Barchart is a free screener. You can go there and look under naked puts, and you can see some opportunities or some suggestions there for selling puts. That's where I find them at. I do have a little bit of a convention is I want to pick the stocks, even though they give us a list on bar chart, I go through the list to make sure that the analysts have the stock as a buy rating and not a sell rating. In some cases, it'll say like strong sale, and I don't want to have one that's on a strong sale rating. I want a buy rating on them all. Come on, come back up. Here we go. I want a buy order, buy, strong buy, neutral, right? You don't want to do selling a put and the price and the analysts think the price is going down. That's not what you want, because even you're doing it for income and you kind of rather not buy the stock, but if you want to acquire the stock, then you're okay with that. But if you're doing it primarily for income, it's not what you want. So you want to pick something that at least has a buy rating, or the analysts are saying it's, neutral, which means it's holding steady, or it's a buy rating, which they're suggesting that you're buying it and prices should be going up, right? Because with selling a put, you need it to be above your strike price. Most people who listen, some people listen to me, I won't say most, people know about buying calls going up. People know about buying puts when you think the price is going down. When you're selling a put, you think the price is going up. When you're selling a put, you believe price is going up, right? I want to put a little note here. Okay. Selling a put, your thought is that price is going up. You believe price is going up when you're selling a put. Okay. Not buying a put. Some people buy puts, and that's not what we're talking about. We're talking about selling a put. I think I do want to make this a little bit bigger. So for those of you who are looking on the screen, you can see the size is just a little bit bigger. Okay. When you're selling a put, come on. There we go. When selling a put, your thought is that price is going to go up. So you want to pick a strike below current price. And if you're a charter, which you all should be, you want to select a strike below support. You want to select the strike below support. Sometimes if I'm just going for, income, I'll just go with the nearest. But you do want to be below some support, because you want to feel like if the price does come down to your area, it will come down to your area and turn around and reverse, right? So you want to pick, come on, click, click, click. Sorry if that's clicking in anybody's ear. You thought is that price will go up. I'm going to put a little more to this note here. So you select a strike below support. I'm going to say below current price and or support. Some people may just be fine with being right at current price. Some people may want to be below support. So the current price of EOSE is 254. The support we see is about 226. There's a gap here. This is a buyer's gap. It gapped up and then came back down. So it's a buyer's gap. There's buyers in this little space between these two. So that lets you know that the price most likely will stay above 226, right? Most likely will stay above 226. But let's look for a two strike on our weeks. I'm going to the option chain. EOSC has weekly options. I like that. There's some of the ones that are smaller who only do monthly. I'm one who'd like to have weekly because I want to be able to choose which week. This is for this coming Friday. If we're talking about this coming Friday, and if anybody who was who looked at my content yesterday would have seen that EOSC was on the list of cash secure puts that I suggested for this week. Actually, I gave 8/18 expiration, so I'm going to definitely get there here in a second. But we can look at the 2.5 strike or the 2 strike, right? If you want to do it for just this 1 week, just this 1 week. You would select the 2.5 if that's the strike you like, but we already said that the support is at 2.26. So you really should be below that. So the 2 strike is you're going to get you $5 in premiums. Well, the broker is going to block off the 2 strike times $100 because the broker is going to block off the collateral for the entire trade or for the 100 shares. If you say, I'm willing to sell a put, what I'm saying is I'm willing to acquire shares at this $2 strike price. So the broker is going to block off your collateral just like a deposit of 2, your strike price, times 100 shares, which will be $200. The broker is going to reserve $200 and you're going to collect 5. Not a good return on your money. I try to go with about 10%, 8 to 10% returns. If I'm going to leverage my capital, I want it to be 8 to 10% return in a short period of time. So August the 4th, this coming Friday, in my opinion, wouldn't be a good trade. If you felt comfortable with that the price was going to stay above 2.5, you could definitely go with this one, $20 for just the remainder of this week. That would be fine too, right? Maybe you feel comfortable with it staying above 2.5. Let's go out one more week, August the 11th. If we're looking at the 2 strike again, remembering that support is at 2.26, we might do the 2 strike. If you are feeling confident about the 2.5 within the next 2 weeks, that it would stay above 2.5 for 2 weeks, you could leverage your capital for next week and collect $35. With the 2.5 strike, the broker is going to block off $250 because 2.5 times 100 shares is $250. And they're going to give you, the broker is going to give you $35 in premiums. That's greater than 10% in 2 weeks. Okay, you're leveraging your capital for 2 weeks, and that's greater than 10%. I selected or suggested, I really, this again, none of this stuff is what's that thing called? Investment advice. None of this stuff is investment advice. I'm just showing you a way to help you grow your account using seller strategies. So if you want to do the 2.5 strike for August the 18th, you could collect $50. Okay, that's a 20% return on your money in 2 weeks. But remember, we talked about support being at 226. So you may want to get below that still. All up to you and whether you feel, how you feel as far as your comfort level. Remember, we talked a little bit too about the probability out of the money. Keep that in mind. But the 2 strike collects $20 in premiums. You leverage 200. The broker gives you 20. This is a 10% return on your money. And this runs its course for the 2-week window of time. The 4th is this week, 1, 2, 3, really about 3 weeks because it's Monday of this week here. So I count this week as 1 week, 2 weeks, 3 weeks. I would go with the 2. The 2 on August the 18th, I'm going to select the bid column. If you're a seller, you pick the bid column when you're a seller. Seller's bid. And what we have here, you're saying you're selling one contract of EOSE, expiration August 18th. You're selling a put at the 2 strike. You're going to collect $20 in premiums. You can adjust this by a few dollars if you want, see if maybe you can, or just jump by 5s. So you could adjust that if you'd like to see what happens. All righty. I'm leaving it at the 20 for now. Then when you're ready, you push confirm and send. Confirm and send. It tells you here, your max profit is $20. That's, you're not going to make any more than what you decide you're going to sell it for. You're not making any more than that on the trade. Okay, you said, I'm willing to sell it for 20. That's what they're going to give you. You're not going to I'm putting in 20. And if it goes up, I'm going to get, no. Max profit, it tells you right here. Your max profit is $20. And they're going to give it to you immediately. The money, the broker gives it to you right now, and you can use it for whatever. Your max loss is the 180. Even though it says max loss, it's really not a max loss because if the price comes down, you're going to be given 100 shares of the stock. So you won't really be losing because you're going to be given the shares, which is an asset, right? Shares are an asset. If you go to the bank talking about, I want to borrow money and I want to borrow against my stock. If you've got stock shares, you can borrow money against those. If you've got stock option contracts, they're like, no, no, sis, I don't think so. No, no, no. Shares, though, means you're owner of a company. That's an asset. Options contract papers, not assets. I got $3,000 in options contracts. They're going to be like, oh, nice. That's so great. Can I borrow money against those? No, ma'am. No, sir. You cannot, sir. Sorry. Do you have any shares? You can borrow against your shares, maybe. You can use your shares as collateral, but you cannot use options contracts for collaterals. So, what I'm saying is, if you get given 100 shares or you get put 100 shares in your account, you actually still have an asset. So, that's not really a max loss. You're going to be buying something. It's not a loss when you're buying something, right? Talks about the cost of the trade and all the little stuff here and everything here. When you like it, if everything's like what you like it, then you push send and then you send off the bid. If you like those, you just do multiples. Actually, we got paid $25. We're in the sim. I'm in my paper trading account. Okay. I don't want anybody to think that, Alyssa, balling. Well, she is, but not yet. Not like this. Not, you can't see the amounts here, but you did on that other screen. Anyway, this is the sim. That's my whole point with that. This is the sim. This is the paper trading account. All right. So you look on the chart. So let's review the steps real quick. We look on the chart. You look on the daily chart and you see where is support on the daily chart. In this case, it was 226. So you want to select a strike below the current price and or your support. Some people are feeling a little more aggressive. They may want to be just below current price and they'll, take their run with it. Others want to be a little more secure. Sure, you want to just get below the support. Either way works. You can sell. Remember, the broker will block off your strike price times $100 or times 100 shares. Times $100, same thing actually. A 2 strike means the broker is going to block off $200 minus whatever you take in premiums. But a nice round way to look at it is the strike price times 100. That's how much the broker is going to reserve for buying power. All righty. So we do have a good explanation of all the steps. How do we find the stocks? How do we find which stocks to do this on every week? How do we run the entire strategy? You're finding the stocks you want to use each week or throughout the week. How do you pick your strikes? How do you get in? How do you get out? All those good things are in this wheel strategy. This needs to move out of the way so we can see. Yeah, the wheel strategy is all in this little options course, options training, right? It's on our website. You can go, I think it's running in the ticker underneath the bottom. This shows you how you're selling puts, process runs. If you get assigned, then you sell calls. Those get called away and this is a whole process. And the wheel strategy is an entire strategy that people use to grow their small accounts. All right. And it's probably the most passive of all. I don't even say probably. I believe it is. I guess it's less passive than buy and hold. If you just buy stock and hold, it's a little less passive than that. But this is the next one right up on top of that. You decide what you're going to do. You sell puts. You let it do it. You go on about your life. Let it run its course. And then at the end of the expiration time, if you have shares, you sell covered calls. If you don't have shares, you decide you're going to sell something else with the money. That's pretty much how that goes. Please be sure to go ahead and like and subscribe to the channel. Right? Go ahead and like and subscribe to the channel. We have a Facebook group. If you don't know about that, Facebook group is Educator to Trader on Facebook. Can I hit it there? No, I cannot. There we go. Yeah. Educator to Trader on Facebook. You can go over there and ask to join up with us. All of my trainings and courses are all at educatortotrader.com. You can find me there. All of the social media places, I'm also Educator to Trader. We have a membership going that every morning we do a pre-market call. During the day we trade together. Generally we trade that SPX, what you see on the ticker. We do the SPX. We have a strategy that covers how do we use SPX or XSP, which is the mini SPX. How do we use those every single day in order to generate 10% return on your collateral every single day? I did a video a couple, maybe been one day last week, I think it was, where I showed you how do you make $500 a week using $1,000. And if you don't, maybe you can find that on my YouTube channel. But it's how do you make $500 a week using the same $1,000 over and over and over. And that video walks you through how to do it. You use your collateral, you do selling credit spreads every single day, and you just rinse and repeat that same $1,000 over and over and over. You follow the strategy. It's very clear cut and outlined for you. It's in that. So if you're looking at the ticker that's moving down, the ticker's talking about that SPX XSP training. You can also grab hold of that, grab hold to it at Educator to Trader, and start making your money every single day too. Every single day. Yeah, every single day. And you can make it in a way that's, not as risky. SPX can be scary. I already know. It can be scary. Yes. So why we try XSP, smaller collateral, get your feet wet, get yourself into a good rhythm. You can use that, and then you move up from there when and if you're ready. All righty. I believe that's everything I wanted to cover today. Be sure to like and subscribe to the channel. Please pass the word to your friends, your trader friends, right? That we are here. Alyssa, Educator to Trader, is here hanging out every afternoon for at least the rest of this week. We'll be doing 2:00 lives for the rest of this week. And then we'll continue to provide resources and content. If there's some particular topic that you want us to discuss from a seller standpoint, put that in the, send me a message or whatever, or put it in one of the comments, and I'll be sure to incorporate it in our long list of content ideas. I have a list of content. I got more content ideas than I got time, but we're going to put it all out there over the course of time. All righty. Don't forget our Stay Green and Get This Money shirts. If you check on that, that's in the tickers running down there too. bit.ly/MELINSP. That's for Melanin Inspirations. It's an Etsy shop. Okay. All righty. So we do two things in this community. We do two things in this community. What do? We stay green and we get this money. All right. I'll see you all later. All right. Check me in the comments. See y'all tomorrow. Bye.